Control agreements define who can direct your entities and how that authority is documented and exercised. Control agreements are the documents that establish and govern authority within a business structure. They exist at multiple levels. At the entity level, the operating agreement defines member and manager authority for an LLC. It specifies who can enter contracts, sign checks, make distributions, admit new members, and make major decisions. A well-drafted operating agreement leaves no ambiguity about authority. At the structural level, intercompany control agreements define the relationship between entities, particularly in holding company structures. If the holding company directs the operations of a subsidiary, that direction should be governed by a management agreement or similar document. If an operating entity leases property from an asset entity, there should be a written lease at market rate. At the personal level, particularly in nominee or trust structures, trust deeds, nominee agreements, and declarations of beneficial ownership define the relationship between the person in public records and the actual owner. All control agreements share a common requirement. They must be in writing, they must be signed by the relevant parties, and they must be followed in practice. An agreement that defines authority but is never actually used, where the person just acts unilaterally regardless of what the document says, provides little protection. Document the authority, then actually operate within it. Subscribe for more on the legal documents that make business structures work.